It's Monday, June the 20th, and I'm here with Jerry Randall, Chief Executive of AIM-listed venture group, Epicode VLG, a company that develops, manufactures, and distributes products for the consumer healthcare market. Jerry, it's good to speak with you again.
Hello, Alan. Good to speak to you too.
So, another very strong trading update from Venture Life Group this morning. Before we get into this, as we usually do, can you give listeners a brief overview of the company and the offering?
Sure, Alan. So Venture Life Group is a vertically integrated global consumer healthcare company. So we develop, manufacture, and then sell products for the self-care market around the world, which is the market where you as a consumer would go to the pharmacy or the grocery multiple, you ought to choose a product yourself, pay for it yourself, and treat yourself with it. So we're not in the prescription market. We sell in over 40 countries around the world with over 100 partners. In certain markets like the UK, Netherlands and Italy, we sell direct into the main retailers. So in the UK, the pharmacy retailers such as Boots, Superdrug, Lloyds, and the grocery multiples, the big supermarkets. We've just recently announced our trading update of further growth in our revenues and profitability. And we're a business that's now generating cash, growing and making good profits.
Excellent, thanks for that. So you mentioned the trading update. I'm going to bring up an overlay that shows the key points from today's statement. Can you take us through this?
Sure. So the headline here is the reporting of our first half revenues. Our revenues for the first half of this year, more than 80% up over the first half of last year, and 65 of that 80% is organic growth. So it's not acquired growth, it's products we have ourselves that we sell ourselves. What has contributed towards that is strong growth in our international business in China, in particular, where we sell mouthwash products, but also the development of our own hand gel antibacterial product in response to the COVID situation, which has also grown well in this period. Interesting factor as well for us is that the percentage of the revenue that comes from brands that we own ourselves has now gone more than 50%, gone past the 50% mark to 53%, and it was only 30% last year. And these brands give us better margins and better profitability as we grow. We made an acquisition in January, a company called PharmaSource in the Netherlands, and also we've reported that that's shown a 43% revenue growth for this half compared to the previous half. So again, that acquisition going extremely well for us. We do what we normally do, which is to complete more partnering agreements internationally where customers take our products. They are fully responsible for the marketing and the distribution in their own countries on an exclusive basis, but we manufacture the products for them. They take them from us and they sell in those countries. So we're forever continuing to grow those partners, and also our existing partners grow their revenues. We signed quite a big agreement for us with our Chinese partner who sells one of our mouthwash products. That's now a 15-year exclusive arrangement with minimum purchase obligations of 168 million euros over those 15 years. So very valuable contract for us that we signed in April of this year. We also develop and manufacture products for customers to sell under their own brands, and we did more of those deals. As I mentioned earlier, we created our new hand gel product called Disin Plus, which was launched in Italy. We started supplying hospitals and pharmacies for free in the height of the COVID crisis. We now sell that into a number of retailers in a number of countries, including Asda here in the UK. And I think finally within the period, one of our big customers, Alliance Pharma, who are based in Chippenham, took us on as a second manufacturer of their Calico product, which is their largest product and growing very well. So very happy with that. And then even since the year end, we've continued to sign more deals and launch more products across the world.
That's superb, Jerry. In your comments on the statement, you indicate a very strong funding position, both that's cash, obviously, from the increase in revenues, and of course a borrowing facility as well. Can you give any indications on likely timelines? You suggested that these funds will be used for further acquisitions down the road. Can you give some indications on timelines?
Yes, I mean, we are active in looking at a number of these sort of nice bolt-on acquisitions. We've made 3 in the last 4 years, Ultradex Dental and more recently PharmaSource. These are nice small bolt-on acquisitions, very profitable, immediately earnings accretive for us, and we have enough cash in the balance sheet and access to debt facilities to complete another one or two of these interesting little add-ons. We don't need to go to the market to raise any equity for those. We haven't got any plans to do that at the moment. So this is, as I say, non-dilutive funding of those little acquisitions. And as I would be hopeful that we could complete another one before the end of the year, possibly two. But obviously, each one has to go through its process of due diligence, etc. And they've been a bit slowed down because of the current virus. So despite the fact our business has been trading really well and growing, the M&A side has been taking a bit longer. But as I say, we have some that we're looking at, and I'd hope that we'd have some more news on those later in the year. But as I say, using non-dilutive funding for those acquisitions.
Well, Jerry, it's been great talking with you. Before we wrap up here, can you provide investors listening to this and, of course, your summary of the trading update, some takeaway points going forward?
Sure. I mean, I think one of the most important things is we are, as we've seen, growing rapidly with revenues, but we're growing our profitability and cash generation very rapidly as well. So we've got good quality of earnings, good stable cash flow and profitability, and that is growing very well. I think the second point is cash flow and profitability comes from our operating leverage. We've got significant capacity in our plant in Italy. We've been investing that this year as well, and by the end of the year, we'll still have almost 50% capacity left in that plant with the investments that we're doing. So able to put a lot more revenue through the business without significantly incurring more costs, and therefore most of the gross margin drops to the bottom line. And then I think finally, one of the things that a lot of smaller companies suffer from on the public markets is liquidity. And watchers will see that if you look over the last few months, we've managed to increase our liquidity quite significantly, and even today with our trading announcement. So it enables people to have a more liquid position in our stock, much more than they would a year ago. And we brought on a second broker, Singers, to help with that liquidity, and already that's beginning to show.
Excellent, excellent. Well, Jerry, Jerry Randall, Chief Executive of Venture Life Group, thank you for joining us today, and please come back later in the year to give us further updates.
My pleasure, Alan. Thank you.